right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. And before I do that, I want to pull up the bias chart and let's get started here. Okay, so the euro. So the euro did bounce obviously from key support yesterday. That was 108.20. Okay, we know that. Okay, really critical support here. We were at range lows, and I even said it yesterday. Even though I shorted the euro, I even said it yesterday morning. I'm like, this is probably a good place to be on the long side. Just put your stop below 108 change. If you get stopped out, then really key support comes down at 107.50, and it actually turned higher. The dollar came under pressure, and I think a lot of that dollar pressure. Um, um, Sorry, I had to respond to something. Okay. Sorry, I was responding to one of our folks in our chat room. She was talking about something. I can't even say it. Okay. So anyway, we were talking about the support here and that was via Twitter actually. So we were talking about the support here yesterday, and I should have taken heed of it being such great support. But I really thought that the risk off that we were seeing yesterday, the possible roll that we were seeing in equities, was going to affect both the dollar in the end. But then, afterwards, I said, okay, this is what's happening. We're seeing yen strength, then you're going to see dollar strength, vice versa, that type of thing. Anyway, the euro dollar posted a really nice rally, obviously a squeeze, and it pushed us right into resistance. I think not myself, because I wasn't short the euro, so to speak. Although I did short it in yesterday's rally, but I think a lot of traders were probably positioned for the euro dollar post Greece. So following Greece, everybody had the same. Think about this. The same conclusion after Greece. Okay, Greece is staying in the eurozone. The the ECB is going to stay loose for longer. Greece is out of the eurozone, or Greece is in the eurozone, and they're gonna just continue to be a thorn in Europe's side. It's a natural euro short, right? That's probably the consensus of the market following the situation in Greece. So following the situation in Greece, the euro fell. Gold fell, and gold is still broken, by the way. So gold broke down, and probably you got more traders thinking what I was thinking yesterday. Is like, hey, gold broke down. The dollar and gold are inversely related. So the euro should go down as gold is going down. Plus, you got Greece still in the eurozone. We're past that, but that's going to weigh on the ECB for a long time. Yada 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 yada. The euro should eventually break, and I think you got probably the market a little aggressively short at support, and they got squeezed out yesterday. And like I said, I sold into the strength, and I still lost money in the euro yesterday. Okay, now I'll tell you, in my view, nothing's changed. So let me say that again. In my view, okay, in my view, nothing's changed. Gold is still broken, and it looks like it's going lower, FYI. So if you're long gold, you should really check yourself before you wreck yourself. Oh, is that a song? It is. You don't want me to sing that. But if gold is breaking down and the ECB is going to continue to keep quantitative easing going, and the Fed's probably going to raise rates, well, the euro dollar will eventually break down. I think just the market got a little poor positioned yesterday, and it squeezed. Okay. Now, with that being said, I think the euro's upside is very limited. Now, where is it limited to? I don't know. I mean, was yesterday it? It could have been, especially especially if the stock market continues on with risk aversion today. Because if risk aversion continues to build in the markets, then you're going to see the dollar gain strength. Because all right, let's call a spade a spade. Okay, when the poop hits the fan, the old saying, when the crap hits the fan. Okay, I'm trying to keep it a PG broadcast. When the crap hits the fan, what are you going to buy? Think about it. Are you going to buy euros? Okay. Now there's an argument yesterday where people are like, "Well, Blake, the new funding currency is going to be the euro dollar, for carry trade funding currency. So when there's risk off, the euro is going to rally back." Well, that's a silly argument at this point. Now, I feel that the euro will be a funding currency moving forward, especially as the Fed starts to raise rates. So let's say I'm just going to speak 2 years from now. Let's say in 2 years the ECB is at zero, ZERP basically. The Fed is at 2%. Great. The euro will be a funding currency, meaning the euro will go down as stocks go up, okay, and the dollar will rise. True. When there's a difference in interest rates. Is there a difference in interest rates right now? No, there isn't. And if you think about the carry trades right now, the very nominal carry trades there had been, if you've been buying Australian dollars or New Zealand dollars as the stock market's been going up, tell me how that's worked for you. There's if you've been if you're an institution and or a bank and you've been applying carry trades for the last couple of years, you've gotten killed. There's no way you've made money. There's no way on God's green earth you made money. So if you've been selling dollars and buying Australian dollars for the last 2 years as stocks have been going up, you've gotten killed. There's just, there, I mean, there's just there's no other. I mean, I don't care how you look at it. Stock's been going up. You've been buying the Kiwi dollar. How's that worked? You bought it at 85 cents. It's sitting at 66 cents. You're out of the business already if you've been parking money in Kiwi dollars. So I don't agree with the carry trade argument right now. Now, moving forward, sometime in the future, when you see interest rate differentials widen, it's going to make sense. Right now, I don't buy that argument. I just don't. Okay, so with all that being said, the euro dollar, when the poop hits the fan or the crap hits the fan, and you've got to turn around and say, "Put me into cash." You're not going to say, "Put me into the euro," because you're going to say, "All right, hey, listen, Greece is going to come to the Greece is only on the back burner. If you think Greece is saved, you got another thing coming. Greece has been done. You're cooking on a stove. Greece has just been moved to the back burners on your stove. The front burner right now is probably China. Hell, we might even put Portugal back on the front burner. But Greece is still simmering on the back burner right now. Right now, it hasn't gone away. Okay, so you're not going to put your money into euros. If the poop hits the fan, you're probably going to buy dollars, and you might even buy some yen, which you're seeing that happen now because yen has been the natural carry trade of choice in the past, and then also, or excuse me, the natural safe haven of choice in the past. And plus, the yen's got beaten up so bad that people might find yen as more of a value proposition down here. Now, I've had somebody else just ask me a little bit about the Swiss. Oh, Simon said, "Hey, Blake, will the Swiss strengthen too if yen and the U.S. dollar strengthen?" I don't think so. And the reason why I say that is because Oh, look at gold, guys. Hold on. Look at gold and look at crude. I don't think so regarding the Swiss franc because the Swiss National Bank has made it so uh, uncomfortable or unappealing to be long Swiss francs. I just don't think that's the case. Look at gold. Um, so there's gold. Look at crude. It's 5 minute chart. Here's crude. Crude's starting to show some weakness too. So anyway, I guess the point I was trying to make is if the market starts selling off again, you got to watch the dollar. The dollar might start to gain strength from here. So we got to get these numbers down on our charts. So going to the euro. So what are we dealing with? Here's the euro dollar. Um, the euro dollar resistance is going to come in at well, first of all, we have obviously 109.70, big resistance. Previous support, 38% retracement. It's a big deal. Should we break? Should we break that resistance? I'm giving you the if then. Okay, if then we're going to 111. Okay, so just 109.70 is key resistance here. Okay, and remember we're still in a range, but we're close to turning into a bearish trend. If or when we get below, my 2 cents is when, but whenever we get below 108, the euro is going to turn bearish again. Okay. Remember, if um, look at gold rolling over. Um, okay, so the euro dollar, where's support? Support should be right here. 108.70. Eric in our chat room, Eric with a K, said that's a 618, and he is correct. 108.70. So 108.70 should be support today. 108.70. Okay. Let's go over to the cable. Okay. So here's the pound. Now, the MPC voted on they made their votes yesterday, and it came out at 0, 0, and 9. The market feels that because they talked about Greece and the risks associated with Greece during the MPC meeting minutes, that that Greece is going to start to come back in, or Greece is the problems in Greece rather. Sorry, I was going the other direction. Um, the situation in Greece now that it's abated a little bit, that the MPC, like the FOMC, can focus more on monetary policy and possibly raising rates. So the cable rallied as a result. Now, as far as the pound goes, we held support yesterday. We didn't break down, um, and we held through all the support. And really, this 155.25 is really key support now, and resistance is going to be up here at 156.75, and that's we just have to play this range. It really is just more of a range between here and there. Okay, so you can do this. Okay. Probably, right back up here is probably where we're going. Okay. If the dollar continues to pull back. Okay. So 156.75. And basically, I'm just not dealing with the pound anymore. 155 and a quarter, 156.75, and I'm gonna try to trade the extremes of these ranges. So in other words, if the pound gets it up to 156.75, I'll probably get on the short side. And if it gets down to 155.50, I might consider longs. I don't even know. I don't know if I'd play the pound dollar long. Okay. What I'd probably do is play the pound crosses long, in other words. Okay. All right, let's take a look at the Swissy. So I bought more Swissy yesterday at 95.60. I think it's 60 or 65. I can't remember. So here's the, whoops, I just passed it. Here's the dollar Swiss. So when we're down here around the 60 level, I bought some more Swissy. Now we're facing some resistance right now, so just understand that. Let's see where that resistance is. Here, let me deal with this. Okay, first of all, the 96 cent levels holding resistance. So now any rally back up towards 96.20 from where we're currently at, probably going to give us some problems. Maybe 96 and a quarter. Okay. Support. Hold on really quick. Let's delete this. I don't want that. I don't want that either. And all I know is that is huge support if we ever get down there at 95.40. But I think traders are trying to buy it ahead of there. I know I was. So 95.55, 95.40, big support levels through here. This is all, this right here, right through here is a big buy zone. Big buy zone. Okay. In the Swissy, if we can get it there. $95.40, $95.55. Okay. Let's go. This has turned bullish, as it has been the last few sessions. Now that we've broken out that 96.70, or excuse me, 95.40, it's turned bullish. Let's go to the yen. So the yen's firming up a little bit. I think a lot of that has to do with gold. If you guys see it, gold's hitting new lows. We're down 15 bucks. Man, gold's heavy. Whew. Dollar yen support 123.70 has been holding 23% retracement, comes in at 123.50. I mean, hey, futures are rolling over too. I just noticed futures rolling over too. I think the dollar yen is going to find some resistance here. So 124 should offer resistance today, frankly. 124. Because I think futures are, I think the stock market's, you can stick a fork in it for a while. So I would sell in the strength in the dollar yen if you get it. Dollar Canadian. So what's the term that I should use on the dollar Canadian? I loaded up the truck when we dropped down to 129.35 yesterday. I basically added the rest of my position that I've been waiting. Remember when the dollar Canadian broke out here and I only had about a half size position, and I was kind of upset about it last week when it broke out. You guys remember that? I'm like, damn it. I sold some that I owned, and I'm like, I wish I had a bigger position, but I got what I got. When the dollar Canadian dipped yesterday, I picked up the rest of it. I um, I you know bought it as we dipped down to the 129.35 yesterday. And so now I'm in a full size position in the dollar Canadian. I am looking for a break above 130. Maybe not today, but eventually, especially if crude oil breaks below 50. I think that the risks then start to get really high. The risk gets high for a breakout. Okay, so 123 and a quarter is resistance right now. Well, there's two. So we have, or 130.25, excuse me. So we have support at 129. Again. Excuse me. 130.25, 30.65. Okay, bullish. Okay, when we come back, we're going to do the Aussie, the Kiwi, the dollar index. We're going to look at the Nordic currencies. So don't go anywhere. Be right back. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you. Hey, I just tweeted out uh, uh, the chart from Nick Trades, and I didn't have that much data on my gold futures contract. Okay, I only have data to like the, I don't know, 99 maybe. No, 2004. But if you look at like a longer term gold chart, you can see it here in like 98. We were down at 230. From the highs, we're at the 50% retracement. I still think we're going lower. If it was like the 618, I would be a little concerned, But 50%, just so you all know, 50% retracements don't dissuade me from being in a trade. 618s are I start to question, and that's my own um, personal take on fib levels. When we're at 50% retracements, they don't sway my decisions one way or the other. But we are near we are at a 50% retracement that we should pay attention to, at least be aware of it. All right, let's take a look at, we still have to do the Aussie, the Kiwi, and the dollar index. So Dow futures are down 72 points, S&P futures are down 10, NASDAQ futures are down 62, and the Swissies above 96 cents. Yeah. Canadians creeping back up to the 130 level, and let's go over to the Aussie and the Kiwi, which the Kiwi just slumped. I don't have any Kiwi exposure, and the only exposure I have in the Aussie right now is the Aussie. Oh, no. I have Aussie yen and I have Aussie Swiss. I'm hedged because I'm long Aussie Swiss and I'm short Aussie yen. So it's more of just kind of a wash at this moment. But let's take a look at the Kiwi dollar first. So you have to be really careful with the Kiwi today. Obviously, the RBNZ is meeting. I do believe that the Kiwi has the potential of squeezing post RBNZ. But it depends. I mean, if the RBNZ sets the stage for more rate cuts, then that's not going to be the case. If it seems like this might be the last one, at least for a while, you might get a squeeze in the Kiwi. I'm not going to be in the New Zealand at all. I'm not going to be in the New Zealand dollar at all. I'm not going to be long. I'm not going to be short. I'm just going to hang out and wait to see what happens here. I do think key resistance at this moment is, let's delete this really quick. Key resistance is 66.50. and then support, just like we had support back here. This is probably going to be about a 618 retracement of this entire move. Would be my assumption, and it is. This 65.59, but I'll just give it to 65.50. So 66.50, 65.50. It's a place to play it, and I don't even think the 65.50 level would be a bad place to be on the long side for the Kiwi if you can. It's only 30 pips from here. If you can get it down there today, that might not be a bad place to be on the long side. That is key resistance to the upside, and we are bearish. The Kiwi, we're bearish. We're in a bearish trend, but like I said, I think the potential for the Kiwi to kind of buck the trend today, I think it's high. That's why I'm just not trading it. I'd rather trade it to the short side, but personally, I'd rather do this. Let it bounce and then short it tomorrow at 67 cents. That's where I'd like to actually trade it to the short side, would be right there. Okay. If you want to get long, this might not be a bad place to get long though. As long as you keep your stops tight. Now, some people might say to me, Blake has been abducted by aliens, and he is now looking to go long the Kiwi dollar. That's not true. I just think it's pretty oversold. I've not been abducted by aliens and taken over by some Martian just because I'm talking about being long the Kiwi dollar. All right, so the Aussie. Yesterday, we were here. So, hey, if the Aussie rallies back to 74.50, it'd be a good short. We rallied back to 74, somewhere up there, really damn close, and reversed. That worked out pretty good. Even in my Forex wrap, I said, after the inflation numbers, if you can get short the Aussie dollar on a rally. I was in the chat room yesterday. I'm like, short this rally if you can get it. Short into the strength. I think you have to play this range right now, and now this resistance is very key. Okay, you can see even if we rallied in the Aussie, by the time this blue line intersects, I mean that's going to take us to 74.50. So 74.50. That's 73.60. See that spike right there? So I bet you right here, 74.50, 73.60, and then 73 and a quarter. Okay. Resistance 74.50. $73.25.73.60. Okay, last but not least, let's go to the dollar. I actually need to show you a couple things. Okay, so here's the dollar. Dollar index, really key resistance comes in at, if we rally today, 98.50, okay? If we rally. And the reason why I say that is, let's say the market goes really risk off, okay? If it does, the upper end of the resistance could come into play. We were down like 1% yesterday. We could be up 1%. I think Paul Franco had this drawn up, this support, which is a 38% retracement, right? Okay, meaning that if we get a dip down to 96, let's call it 96.50 right now, that's going to be support. Okay. I got a question, and I want to address this really quick before I go on anything else. So I got a question a little bit earlier this morning. Asked me, hey Blake, why do you do these webinars? Why don't you just trade? And I've had that question from time to time over the years, and I'm going to give you my standard answer just because it's important to know why I do these webinars. You guys know I trade, and I trade pretty aggressively too. And you guys do understand I don't work for Goldman Sachs, right? I don't work for Citibank. I work for a small little company called Wise Trade. Now, I'm the chief currency strategist at Wise Trade. I'm going to tell you right now, I'm not making the same salary as if I was working at Goldman Sachs as a currency analyst or at Citigroup. Well, and I don't get the stock options that I would get at any one of those firms. Okay, it's kind of the price I pay for not living in New York, which is fine. I'd rather me personally, I'd rather live and be within a 2 minute drive of my family or a 5 minute drive of my family, because when you die, when I die, I'll tell you, money to me is not everything. Money helps the world go around, and it makes things a little easier as far as life goes. But what's most important to me, if you haven't figured it out, is my family. Okay, I could really give two shits about living in New York and being on CNBC and working for Goldman Sachs or Barclays or it just doesn't matter to me. I don't care about all that crap. I really don't. Okay. I have a good job working with Wise Trade. They pay me a salary, but it doesn't support my lifestyle. I have to trade. I have to. In order for me to do the things that I want to do and to afford the things that I want to afford and to live the lifestyle that I want to live, I actually have to trade to supplement my income. Okay. Which is, oh man, are you watching the Swissy rip right now? Woo! Yeah, baby. That's all I have to say about that. Um, and the euro is going into crap dive mode. Hold on. No reason other than gold's getting hit and the dollar is just ripping. So, hold on. Euro yen. If you got short yesterday with me on the euro yen, I'm up 68 pips. I'm thinking about covering it right now. I'm going to close. Hold on really quick. Sorry, guys. I'm trying to have a conversation with you, and then all of a sudden the market starts moving aggressively. Um, uh, Stand by. I feel like I need to take profits here. You guys, a lot of you guys shorted the euro yen with me. I see you guys are writing in. I'm going to take. See, futures are breaking down too. I'm going to take 70. I just took 70 pips out of the euro yen. I'm going to keep my Aussie yen, but I just closed my euro yen for 70 pips. Just letting you guys know. That was a nice trade. Hold on, I'm just closing out positions. Just stand by really quick, guys. Um, and okay, yeah, I just closed that out. Okay, so going back to what I was saying, look, I have to trade, and I'm going to be trading with or without you. All right. The reason why I do these webinars and I continue to do them because it helps me out tremendously. It helps me out on for a couple different reasons. First of all, I get a lot of great trading ideas from you guys. I really do. I mean, I have a lot of good traders that listen in here every day. It's like a group effort to me. I've got people like, let me see, like Stavana writes in, I can imagine you and, at Goldman Sachs, just upgrade Twitter stock for me. Haha, that was a joke. But like, okay, like here, let's see. Um, uh, Diago was talking about gold. I get Dennis says you did not finish the Aussie dollar. Some, you guys will bring up like cross rates. Anyway, I get a lot of great ideas from you guys too. Okay, which is great for me. And but what's more important is I do analysis every single day. If I didn't do it for you, I'd be doing it for myself. If I did it for myself, I can I can guarantee you, because I'm a human, I would be more lax about my analysis, and I'd probably really monetarily pay for those mistakes. Okay, by doing this analysis for you and obviously for a couple thousand people every day, when I go through the markets and I go methodically through the charts, it really helps me because I'm very thorough about my analysis process, because I know that there are people all over the globe that really appreciate what I do. And you look at my analysis, and you depend on it to a certain degree. Okay, because you're depending on my input, not necessarily like buy this, sell that. I don't try to give you advice. I just try to give you good, solid analysis. And I know that you guys enjoy it, but I also feel that, to me, it's a kind of a duty, which keeps me straight. I don't drink alcohol during the week typically. I don't have a couple of beers at night, because I know I need to get up really early in the morning and get through the analysis. It keeps me level headed throughout the course of the week. Um, I don't. I mean, I very easily, if I knew it was just me, it could be a Wednesday night, and it'd be 10 o'clock at night, and I know I got to get up at 3 o'clock in the morning, and I'd say, I'm just going to sleep in, and then I'd miss some great trading opportunities. I'd be tired. I wouldn't do like the proper analysis. I'd get out in the markets. I'd lose money because I didn't go through thoroughly through the charts. So to me, there's a lot of positives for me doing these webinars. I mean, because I could have stopped 10 years ago. And the same with Kip, and I mean, we could have just not done these. But I like doing them. I like doing them because I think you guys get a lot out of it, but I get a lot out of it too. It's a two-way street. Anyway, I got asked that question a little bit earlier, and so I wanted to answer. Um, and really, to me, like I said, most important thing to me is family. Because when it's all said and done, when I'm lying on my deathbed and I'm reflecting back on what was important to me in my life, I can I can I can I'll die, and I'll know that I did not give it all up. You know, I could have moved to New York. I could have been an analyst there. I could have made a ton of money. But you know what? You can't buy my time with my kids. You can't buy my time with my family. And I wasn't willing to sacrifice anymore. So I'll sacrifice the money part to be closer to my family and my friends, because that's the most important thing in my life. You may or may not share those views with me, but that's how I view things. Okay, let's go into some of your questions. Ubaith says, "Good morning, Blake. Hope you had a you hope you're."